U.S. natural gas futures slipped on Friday, giving back much of Thursday's weather-fueled advance after failing to push through key resistance. The December NYMEX contract retreated following a brief test of $4.42 on Thursday, as sellers emerged just below the 200-day moving average around $4.45. Forecasts continue to lean bullish for demand. Weather analysts expect a strong cold front to sweep across the western and northern U.S. from Sunday through Tuesday, driving temperatures down into the upper 10s and 30s. Meanwhile, Maxar Weather Desk has turned colder in its outlook for the eastern U.S. during the November 12th to 16th period, bolstering expectations for early season heating demand. Still, the market's tone on Friday remains cautious. The weather-fueled rally appears fragile without stronger price confirmation, especially after bulls were unable to push through the $4.40 resistance. Until clear follow-through emerges, that resistance level remains a major obstacle. Supply remains a persistent headwind. Lower 48 dry gas output climbed to 110.1 billion cubic feet per day on Thursday, marking an 8.4% increase from a year ago. While LNG export flows edged up to around 17 billion cubic feet per day, rising production continues to outstrip demand growth. Looking at current natural gas storage projections, a notable development could be on the horizon: the first storage withdrawal of the season for the week ending November 14th, driven by the expected cold spell between November 11th and 16th. However, this scenario already appears reflected in the recent price surge above the $4.10 mark. Afterward, weather models indicate another shift toward milder conditions, which could result in a bearish storage report for the week ending November 21st. That potential outcome isn't yet priced in, as traders are waiting for confirmation. Once the warmer trend becomes evident next week, a price correction back toward the $4.10 pivot seems likely. Meanwhile, the current bullish sentiment may soon shift bearish as this winter shapes up under a developing La Nina pattern. Last year's key story was the transition from a strong El Niño to La Nina, and this year, the phenomenon remains in focus, though several additional factors could influence the upcoming season. Meteorologists released their winter outlook on November 5, noting that a weak La Nina last winter brought colder than normal conditions to much of the U.S. during December, January, and February. However, they also pointed out that the months before and after the core winter period, November and March, were relatively warm across most regions, effectively offsetting the overall cold in seasonal averages. Typical La Nina winter impacts include wetter conditions for the Northwest and Midwest extending to the Ohio Valley, colder than normal temperatures across the north-central U.S., drier conditions in much of the South, and warmer than average temperatures dominating the southern plains, South, and Southeast. You might wonder what this means for natural gas prices this winter. As shown on the forecast maps, meteorologists anticipate an active polar jet stream pushing down from Canada into the northern U.S. But more importantly, the most populated and gas-consuming regions, particularly in the west and east, are expected to experience warmer than normal conditions, which should reduce heating demand compared to last year. Still, weak La Nina patterns are known for their volatility. I would therefore expect another turbulent winter for natural gas, with prices swinging back and forth in the $3 to $4 range. From a technical perspective, the inability to push past $4.45 has traders on alert for potential short-term weakness. A decline below the $4.30 pivot would signal confirmed selling pressure. Key support levels to watch next are $4.20, a recent swing low, followed by $4.05. Meanwhile, with the 50-day moving average still much lower at $3.95, longer-term buy the dip sentiment remains intact. However, in the near term, the market appears poised for a corrective pullback. Don't forget to leave a comment and check out the ads to support the channel. See you in the next one.